he has seen in 35 years. We will talk about the numbers, that, and more. We will talk about the East Coast port strike, which I believe goes into effect tonight at 12:01 a.m. Could that impact a lot of things? What will it do? We need to have that discussion. We'll talk about some earnings that I'm looking at this week. We'll talk about the China stock market and the fact that stimulus is working. And of course, we will talk about defaults, credit cards, car loans, and homes. Alrighty, folks, let's get into this. What the heck is Mark Zandi talking about? Mark Zandi, in a tweet yesterday, talked about the economy being the best he has seen in 35 years. How can that be? With all the fear and doom out there, with calls for a recession, with calls for inflation, stagflation, all of that. I thought we should look at the numbers and then just have a discussion. Is Mark Zandi talking his book? Does he have an ulterior motive? Don't know. You can go to his Twitter feed and interact. That tweet of his clearly is blowing up this morning based on what I saw. So here are the numbers, right? These are just the numbers. And yes, I know they're government numbers and government numbers lie and all of that stuff. But for the moment, we're just going to look at the numbers. GDP. GDP was most recently reported in Q2 at 3%. It is currently forecast to be 2.9% in Q3. Folks, do you know Q4 starts tomorrow? Q4 starts tomorrow. This is the last day of Q3. Hard to believe. So, okay, GDP above trend, right? Above 2%. Unemployment. Unemployment last reported at 4.2. We will get a new reading on Friday. That is also expected to be 4.2. You and I both know about the missing 818,000 jobs. You and I both know about the Fed now adjusting the government numbers. But again, unemployment certainly below 5%. Inflation. We've had some good news on inflation lately if you ignore PCE core. PCE core, of course, is up 2 months in a row. But other than that, CPI headline, CPI core, PPI, other things, again, inflation coming down. And frankly, I believe it's mathematically certain that we could be below 2% by April or May, X, some worldwide event. What else do we have? We now have the Fed cutting rates. We have the Fed cutting rates. They've already cut 50 basis points. I believe they're cutting another 50 in November, followed by probably a quarter in December. So we will see 125 basis points in Fed rate cuts in about, 90 days. We have homeowners with record levels of equity. We also have a stock market that is seemingly hitting new highs day after day. So again, when you look at those numbers, GDP, unemployment, inflation, Fed reducing rates, homeowner equity, all-time high for stocks, what do you get? Do you get the best economy in 35 years? Or perhaps you get an economy that has never been so bifurcated. I believe what we are seeing in this economy is something that I'm hoping more and more of you are doing. And that is asset owners. Asset owners are winning. If you purchased a home, you're likely winning. If you have an investment property, you're likely winning. If you own stocks, you're likely winning. Again, what we need to realize is that inflation is a feature, not a bug. We need to invest like it. We need to understand that if the game is played with inflation, we need to play the game. So who's losing in this bifurcated economy? If you own nothing and you rent everything, you are clearly falling behind. We have clearly seen a broken housing market cause the decline of affordable homes. My hope, again, is that home builders perhaps with some federal government incentives, build a lot more affordable homes, but we shall see. We have rising government deficits. A lot of this GDP growth over the last 6, 9, 12, 18 months is government spending. Government spending cannot continue at the same rate. And of course, we are sitting on a ticking time bomb that nobody knows when it goes off, and that, of course, is government debt. Will the bond vigilantes eventually stand up and say no mas? There's a lot of scary things in the future. However, if you just step back for a moment, just a moment, Mark Zandi may have a point. If you look at GDP, unemployment, inflation, Fed now cutting rates, homeowner equity, and the stock market. Again, folks, when I look at that picture, I think asset owners win, and unfortunately, non-asset owners lose. You don't hate the player, hate the game. And I think that's the game we have been playing for decades. It is only coming more obvious to me as we move forward. Folks, something that we are unfortunately going to have to start worrying about starting tomorrow, I believe, without some reprieve or extension, is the U.S. East Coast port strike. It is set to start Tuesday. It will be the first coastwide strike. So this will be the East Coast coastwide strike since 1977. 1977. So again, what will this mean? Will this mean delays? Will this mean inflation? Will this mean store shelves are, bare? I don't know. But the longer it goes on, the more damage it will do to the economy. There is no question about that. There is something called the Taft-Hartley Act. I don't know if you guys know what that is. The Taft-Hartley Act is basically something that the president of the United States can enact that actually establishes an 80-day cooling off period. As of yesterday, I read an article that Biden has no intention, at least at the moment, of enacting the Taft-Hartley Act. Of course, that could change in a minute. But as of right now, it appears that President Biden will not leverage the Taft-Hartley Act, instead letting the strike happen and negotiations to continue. So something to watch there. I do want to highlight the school community. We just became the number 3 real estate investing school on the platform. I want to thank you. I want to shout out John. John joined yesterday, increasing the numbers of community members. I want to shout out the accountability groups. Jared ran a 3-hour accountability group yesterday, talked about freedom, networking, rent control, how to leverage equity, insurance, house hacking, and rereading some old books. Again, folks, please join the accountability group that makes sense for your life and your schedule. As of this morning, you have 3 choices. You have one Wednesday evening, one Sunday afternoon, and one, if you are an early bird, Monday mornings. We have an early one starting Monday off right. If those fit your timeline, join one. You do not need to join all 3. In fact, I would generally not recommend it, but find the one that fits your schedule. Join weekly, at least 3 times a week. Get to know the group, get to know the flow, get to know the person leading it, and let's just all get better together. So some earnings I'm looking at that I think will be telling me about the economy today, after hours or after the close. Carnival Cruise Line. What is going on with revenge travel? Are they having to lower prices? What's going on? Tomorrow, Tuesday, Nike. What's going on with Nike? Obviously, they just fired their CEO and promoted somebody internal who started as an intern. Can you imagine starting as an intern and, 30, 35 years later, you're the CEO? There's a book to be told there. Wednesday will be Levi Strauss, and then Thursday, Constellation Brands. Again, what's going on with retail, what's going on with the consumer, all of that. Well, I think at the moment we need to give a shout out to David Tepper. David Tepper obviously was featured yesterday in the Daily Financial News. He indicated that he is going all in on the Chinese stock market. He talked about even invalidating his rule of 20%. And it looks like, in the US, we have something called Don't Fight the Fed. Maybe in the Chinese stock market, it's Don't Fight the Government. The government has taken out several bazookas and continues to fire them for liquidity and stimulus. The Chinese stock market has gone from a 52-week low, to a 52-week high in about 12 trading days. Talk about a bazooka of stimulus. Just today, just Monday their time, they're obviously closed now, the stock market was up 8% for their best trading day in about a decade. So again, folks, stimulus works. But where do we go from here? Well, I don't know if you saw it, but the German economy just posted an inflation reading at 1.8%. We talked about German economy. I think it was might have been 2 weeks ago, that was slipping into a recession. Will the EU, the biggest country in the EU, start slashing rates? Will they start stimulus? Could we be on the cusp of worldwide rate cuts and stimulus? Scary to think about. Again, folks, remember, we really have two forms of inflation. There's consumer inflation, there's asset inflation, and we are seeing some asset inflation, i.e. see Chinese stocks the last 24 hours. Again, folks, Q4 starts tomorrow. Tomorrow is October 1st, the start of Q4. I just want to remind you that if you have any interest in real estate investing and you haven't made your move yet, join School. We are quickly becoming the #1 real estate investing platform on School, or community on School, because of you, because of the accountability groups, because of the boot camps, because of the value we give. Do yourself a favor and join School. And of course, tickets are on sale for our Vegas event. It is time to start buying tickets. If you start buying tickets now, you can book travel, save money on flights, hotels. You could probably save enough money on flights and hotels to actually pay for your ticket. So again, folks, we are getting closer and closer to the Vegas event. I've given you the agenda a couple of times. I actually put the agenda on the Eventbrite. It is time to start buying your tickets. VIP is almost sold out. We sold out over half the tickets already. So if that's important for you, probably buy them very soon. Now let's talk about defaults. We've seen a lot about defaults, credit cards, auto loans, and homes. I think what you're seeing is consumers who are stretched, who are suffering, struggling, they're making logical, quote unquote, business decisions. There's a reason that credit card rates are the highest, car loans next, home loans the lowest, because those are the default risks. Credit cards, if you don't know, are non-collateralized. They're essentially signature loans. So when you start missing payments and you work through the process in default, there's no collateral. That's why credit card rates are so high. And that's why you typically see consumers default on those first. It makes logical sense. If you are in a tough spot, you pay your mortgage first before you pay your credit cards. Then there's car loans. Everybody knows all these crazy car loans and people taking out during the pandemic and, stimulus ballers and, all of those things. Well, those toys are being defaulted on and repossessed at record numbers. But then why aren't home loans defaulting at the same rate? Well, first and foremost, home loans typically are secured 30-year rate debt. They're not variable. Typically, most folks have a mortgage payment that is less than rent, so it is not economically feasible to trade a lower shelter cost for a higher shelter cost. And we are just seeing rational decisions. Now, of course, that is not everyone, and we will, of course, have some defaults and foreclosures. But we are not going back to 1 million foreclosures or 2 million foreclosures. That is not where the economy is currently set up. So again, I just think it is a household making decisions. They're looking at their bills, not enough income. They default on credit cards first, auto loans second, and home loans third. Last thing we'll talk about is homes. Again, shout out Logan from Housing Wire. Talked about underwater homes. We have a lot of people trying to create fear about underwater homes where the debt is more valuable than the asset. In Q4 of 2010, almost one in four, for an exact 23% of homes were underwater. Today, folks, we are at the disaster levels of 1.7%. 1.7%. So again, if you hear somebody talking about today being worse than '08, just block them. They don't know what they are talking about. Folks, again, this is your daily financial news. We do this live 5 days a week. Do me a favor and join school. You won't miss it. Accountability groups, boot camps, education, and so much more. And of course, if I were going to go to the Vegas event, which I know a lot of you are, I'd be buying the tickets today so I can book travel and save some money on flights and hotels. All right, folks, take care of yourself. Have a wonderful day. Later.